What's going on, guys? Get started in a minute. How's everybody doing? What? That's the wrong one. Oh, you see my dog on the couch. There we go. Good afternoon. Good morning. Actually, good morning here. I'm used to streaming at 12 p.m. So it's 30 minutes after NYSE Open, and we are live. So give me a quick sound check. Let me know if you could hear the background noise. There is a bit of noise in the background. I hope it's not annoying anybody. It's the landscapers. I think this mic does a pretty good job at just isolating sound directly. So me talking right into it and not picking up on much background noise. I'm hoping. So when we get the all clear on the sound, cool. All right, guys, what's going on? Good morning. CPI. Overall, obviously, saying that inflation is coming down. Core's a little sticky, but things are on the up and up. On the up and up with respect to inflation, meaning they are on the down and down. Anyway, thank you guys for joining. Please hit the subscribe button, hit the like button. Make sure that you do all of that. Satisfy my engagement needs. I appreciate it, though. I appreciate everyone who tunes in. I've been doing these consistently again now, 2 to 3 times a week. Let's get into it. All right. None of this is financial advice. This is strictly for entertainment purposes only. Shout out to the sponsors of the stream, Crypto Watch and Bybit. So Crypto Watch has been a platform that I've been sharing the last few streams. It's a phenomenal platform. They have an awesome desktop platform. We'll actually go to that real quick. They have a great desktop platform. That is this right here. I know I've changed the color scheme. You guys are probably going to be pissed off, but for the sake of leaving up the DOMs during some of the stream, I'm going to leave the light charts on. But you could go ahead and, if you want, you could go ahead and modify all the colors to your needs and to your preferences. But it's a phenomenal platform. I've went over the templates that I have and that are available. I make them available. There's a web-based, obviously there's a web-based client, and there's a desktop client. The desktop client is, it is integrated with exchanges, so you'll be able to trade through a variety of exchanges. I'm still waiting on the DOMs for all of the exchange integrations, and when that comes, then we will get back to trading live through this platform. But it's a great platform. You guys can go ahead and check out those links below. There's some really good content on their Twitter page. Someone put together a great video going over all of the features and components and what makes this a really valuable tool. It's something that's been around for a really long time, and they've really started to step up their game in terms of what they're offering on it currently. And also, thank you to Bybit. I think I said that already. Bybit offers bonuses right now from between $100 for $1,000 deposits and then up to, I believe, $35,000, depending on, again, if you satisfy that deposit requirement. Most exchanges are going to be KYCing. I think Bybit is going to be integrating full KYC in the near future. And if you take advantage of their KYC early, I think that you are entitled to certain perks and VIP trading fee statuses and whatnot. So be sure to check out those links below. I've always been a fan of Bybit. I'm still a fan of Bybit. I think it's one of the best exchanges that's currently available. All right. So CPI is come and gone. We've had the traditional CPI related volatility. So we'll go over that. We'll briefly go over the setup from last stream that ended up playing out really well. So that was an inside week setup. So that worked out really well. And then we'll go over some of the possible opportunities that are setting up, hopefully in the near future. What I will say is that just be mindful that even though we're done with CPI, we have a really important Fed minutes being released today at 2 p.m. Eastern Standard Time. And that'll be very significant because that is the first meeting after all of the bank contagion. So we'll get some more insight into, at least the specifics with regards to their language and their approach going forward, even though they've been somewhat transparent with that. Market will begin to gauge whether or not, multiple hikes into the end of the year are likely. They're not priced in, right? It's what's being priced in is them coming off. But yeah, all right. Anyway, let's get into it. So I have a couple DOMs up right now. I have we have the NQ, and then I actually have the micro Bitcoin futures on the right. So I've been waiting for this to get set up and waiting for the CME main Bitcoin futures to get set up, and actually waiting on that connection to come through right now. I just talked to my guy at the broker. For some reason, my account wasn't set up to trade those products. So hopefully that will come on during the stream. And you can see that the market actually trades at a pretty significant premium to the underlying spot market. So, the underlying spot market right now on the left on Crypto Watch platform, that is at, we'll say 3194, and then the CME futures trading at 30, just around 3,400. So it's not 3,400, but 30,400. So it's like a $200 premium. So it's contango, right? It's trading above the spot market, and this is, you're never going to see this in line with the spot market. It's not like it's not going to be as tethered to the spot markets as the crypto native futures. So as perpetual swaps, which have that funding mechanism in place. Not only funding mechanism on top of, not only on top of the market makers keeping these markets in line, but the funding mechanism as well. And these markets are disconnected, so the supply and demand dynamics are disconnected as well. But these products will become more popular. I'm not shilling these products. I don't work for the CME, I don't work for the broker or anything, but I think it'll be something that I will be integrating with the streams moving forward. All right, let's change the screen. Let's take a look at, one sec. Take a look at Crypto Watch. I have a couple things up here. We have, let's see, make sure we got everything in order. I have a light chart book right now on Sierra, so just my TPO and CVD chart. So BTC has been correlated with the NQ, right? This is not something that's new. There's been brief periods where it has come on and off. Clearly I think it's obvious that we're back being tethered to equity index futures, equity indices, benchmarks, whatever you want to use, the S&P, the NQ. The Russell, I think, is weakened, but we're trading more like tech beta again. So the NQ broke out of this 4-day range. CPI move above the range, and as you can see, it's been a pretty significant rejection. First move out of the gate was positive. The numbers were positive, but market's probably a little bit crowded in anticipation of that, so we didn't get the full extension, even though it is early. So, we're within a half hour after market open. Anything can happen. But so far, this is quite a significant pullback. One thing I will say is that, the S&P is still under what is probably the most significant level, which is that 4,200 level. So until that breaks out, I wouldn't really pay too much attention to the NQ, even though BTC and the NQ are very correlated. Until the S&P breaks out, the NQ is already sort of broken out into bull market territory. So if you look at that and you're looking at BTC and you're thinking, well, the NQ is going to lead all markets, it's just obviously not the case. Apple has been responsible for most of legacy market strength, so Apple and Microsoft. But, Microsoft struggling yesterday, Apple struggling yesterday. You're going to need the full strength of the market to continue through that 4,200 zone. So before we get into the TPO, just a bigger picture look. Let me get rid of this box because I made these charts just for today. All right, get rid of this. We'll get rid of this. Okay. Just to reiterate what happened the other day, this is what's going on with this. Hold on. I don't know if it's a little bit of a lag right now. One sec. Let me change something up. Okay, there we go. So a lot of times I will chart on Binance, just because Binance is going to be the one that is responsible for price discovery. But I think Binance has been having some issues with API connections, or there have been issues between software and Binance's API, and actually there's been a little bit of a lag and some trouble with that. So here is that inside week setup that occurred from the last stream. So we closed out that week. We were within the prior week. The inside week setup is traditionally, it is going to be, so real quick, we're looking at this weekly structure that I've boxed out within the prior week. So prior week's high and low. You have a ton of compression and obviously a lot of balance within the last 3 weeks period. So it's no surprise that we've been compressing and we've been in range-like conditions. And a lot of times after you have major changes in market structure and very significant moves like this, you're not going to get a big correction back down to 25. You're going to get a correction that occurs in the consolidation. So I've been talking about that, not looking for the move all the way back down to the level, but possibly getting involved on a move back down to possibly, through 27.5 into 26 region. And instead we broke through that weekly high. And the first target with an inside week breakout is going to be the high or the low of that week that is engulfing the week that just closed. So it would be that high and that low. And the trigger would be the break, right, of this high, so that week's high, to that high, or break of the last week's close to the prior week's close. So it would have been a really tight window or a tight trade based off of just that. So you would have a move from my hedges, like I said, closed out at 28.8. I did that during the stream and actually long this during the stream as well. Now, like I said, normally you're looking at, this is the daily chart. Normally you're looking at a break of that structure up to that prior week. And that would have been, we're talking about a 300-point move, right? Towards the low, it would have been from 27,228 back down to 26.5, like I just said. So in this case, I had mentioned that it would be more likely, given this compression, that this overshot. Right, so I was actually long through this and did not close out at what would be normally the sort of mechanical target for this setup. So we got the inside week breakout. That brings us to where we currently are now. We're back within a prior multi-week consolidation. So I want to see if I can change this up because I have some other boxes already drawn. So there's that inside week breakout. But to highlight where we currently are, we're back within a prior value area. Extending this forward. We were consolidating against that previously. And the high of that structure is around 32. So I had mentioned that I think 31.5 up to 32 would be an area that you would ultimately, I think, look to take profit for a move that extended from the low of this box, or a move that you would expect to extend from the lowest box would take you to around that area, and that'd be an area where it'd possibly be a good idea to try to manage positions or take some off. So we're at the halfway point right now. So through this range, we're at the halfway point, and that actually happens to be the high volume node within that structure. So the POC, or where most of the volume was done. So it's right around 30,000, between 30,000 and 30,000 and 30,500. So as it stands right now, if Legacy has more trouble and if the S&P continues to pull back and if the NQ continues to pull back, I would expect us or anticipate us to pull back down to this support and resistance level, So that 28 to 29 region, that would be where I would look for a retest. But again, this has been a really strong move up. It's possible that we get some kind of consolidation that occurs right here, and then ultimately continues up, which is kind of what you're having. You're getting a good amount of rejection at this level, but the market really isn't going anywhere. So we have 1, we have 2, we have 3 off of this morning's CPI. But as you can tell, the market hasn't really had any trouble holding the level. Another thing to point out is that actually as this has happened, so as we're messing around with that midpoint, a little bit of open interest, not a little bit, a good amount of open interest has actually come off. So if you imagine that there's a good amount of longs that are closing out and shorts taking profit, needless to say, for that position that's closing out, it's not like it's resulted in any kind of further decline. So if we imagine that it's longs closing out, like a good amount of that open interest is longs closing out and positions closing out, well then in this case it looks like the spot market is still holding up and the market is still remaining bid. If we look at Coinbase with respect to futures, Coinbase is trading at like a $50 premium right now, $40 premium to Binance futures. Binance is trading at a $20 premium. So Binance spot market to Binance futures. So it still looks like there is a significant amount of spot demand. And it doesn't really look like there's been a meaningful amount of spot selling besides some of that absorption that we saw here. So I've mentioned that there's probably some significant counterparties that were selling up here just because it was a major level and they had already returned just shy of 2x. And it's not like them to hold through a level. It's not like they're 3AC and, especially if they're TradFi players, they're going to take that kind of return and wait for the market to settle above the level and, probably redeploy at that point. So there's still a bunch of spot demand. We had that absorption. We moved through it. What you're seeing and you're going to see more of is you're just going to see derivatives get hot. You're going to see more aggressiveness in the futures market. And that's just going to come with this new territory. So, let's say the market continues to move higher. You're going to see a lot more derivative activity moving the market in the short terms. But as long as we have the spot support on the high time frame, so as long as we just have that rather latent spot support, there really shouldn't be much trouble. Honestly, where we sit right now, we're knocking at that is 2021 summer lows. If we're above that level, so if we're back within this range, this is ultimately where I think would be a good area to take profit for the extent of this move and wait for things to settle and see how we settle from that. But if we're back above 32 and we're basing out and we've moved sideways for a long period of time and we've built structure and built value, this thing can rip much higher, right? If we're back above 32 and we've moved sideways for a period of months or weeks, or obviously weeks into months, and the market hasn't rejected and we're still holding 28, we're still holding 29, then I think that you could look up to 40. And not for nothing, if we just zoom out and look at this in the high time frame, and I shared this on Twitter a while back, even in dead markets, even in prior bear markets, BTC did not have trouble coming back up to the 50% retracement of the entire move. So if we go to the high here or the high down here, we're still looking at right around 40K. So 40K, just above 40K to 41, 42. So, this obviously would take time, but we're talking about the market moving up above 30, settling for a period of time, developing more value, building a base, and you probably would have, multiple retests of that level. But for all intents and purposes right now, it looks good. That is big picture. Market structure hasn't really changed on the high time frame. The lawnmowers are fucking really loud and annoying right now. The only thing that would worry me would be if we were going to start seeing meaningful closes back within this range. So now we're back within a prior range. So we're back within that consolidation going back to, let's see, one sec. Goes back to, what is that, May 2022. So now that we're back within this range, that 28.9, 29 region, 30K is probably a significant zone, but it's midpoint of that structure. That should ultimately hold. If we start closing outside of that, if we start, where's my drawing tool? I'm getting confused because I'm hitting hotkeys to get my drawing tool up, and it's actually not open. And the lawnmower is completely fucking me up. All right, so if we are unable to hold this level, so that 29 region, and we see a meaningful move below there, retest it, and we have a failure at that level, I think that at that point you're looking at targeting this gap. So targeting below that 27.5 region again, or what did I say earlier? 26.5. So that's if we get a failure up here, and at that point, I mean, we haven't really had pullbacks like that haven't resulted in more serious corrections. So for example, something like this, you have a prior range that the market had worked within. You had that deviation rip through, looked for that to hold as support. And then upon accepting back within prior ranges, the market moves pretty easily back to the other side. So, if we accept below 29, we don't see a meaningful response there, you're just going to target these lows again. And I think at that point, after you've tapped above 30, it'd be much easier for the market to sort of panic and send us back into this gap and maybe see a deeper correction, sort of like we had previously. And I mean, this correction off of this move right here, let's see, just to get an idea of the extent of it. A lot of times I like to pay attention to the 50% level. So, I mean, yeah, that would take us back to those prior highs. So you got a good amount of confluence there. You have this little micro consolidation. You clean that gap up. And then that 50% level is right around that prior market structure high for the first portion of this move. So high time frame, that's what we're looking at. We're back within a range. You want to see 29K hold. 29K holds, and we continue to establish within the structure, then ultimately we should be looking upwards of 31.5 and above. And that takes us back to the high of this range. And the market has been pretty easy with this in this respect, that when we've accepted back within prior ranges, although it's taken a little bit of time, we've just traversed from one side to the other. Let's see. Now the NQ is a little delayed, and the ES is delayed as well on CryptoWatch. This kind of move, so we always talk about, or I've always mentioned, that a half hour after the move is a lot of times when you're going to see a reversal. But this is a positive CPI before market open. Market had been strong into this. I mean, the CPI is always going to be before market open, but we had the move up, right? After CPI, we had the reversal. And then here is the half hour mark. You get the rotation down, clean up the origin of the move. And honestly, I wouldn't really pay attention to this until around, a lot of times, anything that happens within the first hour of the day is not something to take too seriously. There are a lot of trading opportunities within the first hour of the day. But given that we have the Fed minutes today as well, I don't think you could glean a whole lot from the fact that this popped up and then reversed. Meaning, there were significant sellers up here. So there was an iceberg in the ES that stood out. Let's see if we could pull that up. You can't really see it on this time frame. It was actually right here. It was it's kind of clean. So there was an iceberg up there at 4170. But the fact that this reverse doesn't necessarily mean much. That's what I'm trying to say, and I'm having trouble saying that. So I would just, keep in mind that today we have FOMC minutes, and that's at 2 o'clock, and it could just be a volatile day, and you're not necessarily going to get a lot direction-wise. And I mean, at least if anything, after the minutes are released, maybe you'll have a bit more of a clear idea. But S&P is still under 42, still in that zone. So as long as we're chopping around within here, signs of strength within here are great, but I think 42 is a level that you have to really break out of. And again, this is we're going on like 10 months of no close outside of that level. My mouth is so dry. Give me 1 second. That you guys probably can't hear it, but that lawnmower is distracting the hell out of me. So I apologize if the stream's a little choppy in the thought process, but it's really loud. It's right next to my office. It's one of those ride-ons. And it's a good exercise in concentration, I guess. I would be failing the test that Tiger Woods' dad put him through where he threw the golf clubs every time he went to go hit the ball, because I can't think for shit right now with that lawnmower on. What else? All right, so let's get into intraday stuff. All right, so here's the last 3-day profile. We have, or 3 days worth of profiles. We have 2 days of balance so far. So we have inside value. After an imbalance move like this, you should expect that the market's going to consolidate for 2 to 3 days. I've talked about this a lot. 2 to 3 days is kind of a given. We have 2 areas of single prints. So we opened and never came back to that level. So those singles are between 29,525 and 29.3. And then we have another set of singles just under 29. So that 29 level, I think, is obviously the level that has to hold. A lot of the times you're going to see that the singles are the best area to get involved if you're looking at getting involved in a continuation move. So what we would want to see is that, let me change the ink color in the drawing. You would ultimately want to see that the market, if it comes into this 29.5, 29.4 zone, responds very quickly outside of that. So we have a move into it that is met with a lot of demand. And that's probably one of the best areas to get involved in the short term, or at least to look for short-term opportunities, because we haven't retested it. We haven't pulled back down to the point in which we had that breakout. You wouldn't really want to see that the market accepts back within these singles, because then you're probably going to fill out these singles down here. So under 29 down to 28.6. But the idea is that this area has those gaps, and it's an area where, again, that was our high time frame resistance for, we were going on a couple weeks, and we haven't come back to test that level, and it's probably a good area to get involved, or at least look for short-term trades. As it is right now, we are back within yesterday's value. We have not taken this high yet. We've had a good amount of rejections so far, but again, that OI has come off and the market is holding up. I think that this is more than likely going to test the highs again. I mean, from the looks of it right now, we've trapped a good amount of volume under yesterday's value. POC moved lower. Now it looks like we're about to start trading above yesterday's value, and yesterday was a pretty balanced day. So what you're looking at is possibly after today closes out. I mean, if it closes out like this, if we continue to move sideways, you have a really good inside day setup, because you have, for the most part, I mean, it's not perfect, because a lot of times with inside day, inside value, you would want to see that there is more than 50% overlap. So this is like just on the edge of it. So we have, most of, if you talk in terms of presence, it isn't, because we spent more time outside of it. But you have a good amount of value overlap here. But more importantly than that, to also strengthen a setup, you have a possible inside day setup. So yesterday, and then today's low and today's high being within the entirety of yesterday's range. So that setup, similar to the last one, you're looking at either a breakout of the high or a breakdown through the low. I would just be mindful, though, in this condition, right? A break through that level, taking that high, look for the fake out up here. So just be mindful of any kind of fake out through yesterday's high. We haven't taken that. It's not the case that we have to take it. There's been many times where we haven't taken highs and the market has just rolled over instead. But again, if it was to roll, I would be looking at that pocket between 29.6 down to 29. It's right around 29.4 for a response. And honestly, after this kind of strength, and there's really not a ton of derivative overheating or anything like that, I would anticipate that you would get a response from that, and that would be a good short-term long opportunity. In the case that, let's say, we actually come into that level, and then you're left with, what the fuck happened there? Oh, it just keeps pulling that up. I don't know how that happens. Let's get the drawing tool out down here. In the event that, let's say you're late to it, market wicked into this level, and then we're trading back within value, so back above 29,900, that's probably a long, at least up to these highs. So let's say that, one sec, let me expand this. Let's say that the market comes down, tests these single prints down here, and then now is trading back above what are currently the lows of value, and you know, sort of that region where yesterday's value area low was as well. So again, between 29.9 and 30. If you get something like that, and you know, you at that point, if the market moves lower into these singles, you've transitioned the POC lower, you've probably brought more volume and open interest into the market as people probably sell into that. If you're trading back above what are, I think, just the current day's lows are probably a good trigger. So right around, again, 29.9 for anyone who can't see it on the chart. If we do something like that, break down into those singles, and we're trading back above 29.9, at that point, this POC is probably lower. Again, we probably bought some more, we've, you know, brought more participation into the market, more positioning into the market, and then you probably have a good long, at least up to today's highs, which again are right around yesterday's highs, and that area probably gets cleaned up. I wouldn't get too aggressive through today's highs, though. So too aggressive through today's highs into yesterday's highs, because I don't know. You know, the way that the market is chopping around right now, the minutes aren't released yet. Again, you probably have more clarity post-release of minutes, because at that point, I think the S&P and the NQ will choose a direction into the end of the week. But as it stands right now, not entirely sure. In this move lower, you've had a good amount of selling come into that low, right? I don't know if we've necessarily seen that squeezed out yet. So after rejection, after the after the CPI, after that kind of rejection, you're going to get a lot of people betting on a complete reversal, right? So, I mean, CPI gets reversed. So a lot of times you'll see that happen anyway, but you'll whipsaw. You'll normally be left with something that looks like this, right? And then settles back, but we didn't even get that. You know, we did take the beginning of the move right at the release, but we haven't had any kind of full extent of follow through. And from the looks of it, you know, there's been a lot of selling that's come in. You know, you have a good amount of shorts. You have a good amount of positioning. You know, where we are right now, you have a good amount of positioning coming in on both sides aggressively. So it's hard to say, you know, it's one side or the other that is egregiously offside. But what you can say after something like this is, in this little micro consolidation where you've had this pickup in risk, let's say, for example, so let's just encapsulate CPI completely. So that took us from, right, so let's just say this consolidation is probably best. I don't know why that keeps doing that, right? So that is where you've had your pickup in open interest. All right. That is where both sides are getting aggressive. Short-term scalp-wise, you probably have a good scalp long if we break out of this consolidation above 30,003. And that probably takes you to, that's probably good enough to take you to yesterday's highs. So right around 30,600. And that's because, again, you can imagine that after a rejection like this, a good amount of the risk that's come in is on the short side. But like I said, it's a mix, right? We're having, you know, the spot market looks healthy. You're going to see people betting harder in futures to get extra exposure because it looks really bullish, right? So if we're breaking outside of this, I think, because we have both sides getting very aggressive, I think you want to see that you're clearing the extremes of this move to put, you know, to absolutely put one side off sides, right? If you are, you know, if we're putting shorts offside and we have longs in here as well that are very aggressive, I think you got to get through the extremes to really make a, to make, I guess, to set the trade up in your favor such that it's not, what am I trying to say right now? Can't think right now. That fucking lawnmower is really messing me up. The point is, it's not just clear, it's just shorts. If it was just shorts, let me clarify that before I sound like an absolute moron. If it was just on part of aggressive sellers coming in that we were looking at, I would say strength in microstructure even lower would probably be something you could get behind. So point is, you'd have this low, and then some kind of basing out here. You'd probably be able to get long behind to say, okay, good amount of shorts got involved. We're trading higher than where majority got involved. So, commence the squeeze. Whereas it's both sides kind of equally right here. So, if you're longing in the middle of this structure, there's still shorts that are in good position higher. It's not necessarily a clean case of one side being squeezed until we're out of this entire structure. Jeez, that took a bit. I almost wanted to, when I saw these guys showed up, because my landscaper, he said, hey, we're going to come by, we're going to do a cleanup. We're not sure if we're going to come Wednesday or Thursday. I thought they might come later in the day. And then when they showed up, I'm like, fuck. I got to stream. It's impossible. All right. Does everyone understand what I was saying? Because I know that sounded all mumbo jumbo. My point is, it's not clear to me that one side is completely offside right here. Even though I want to say that there's a high probability that shorts got involved aggressively because you had the reversal. I think that you just have a lot of people that are jumping at this on the long side as well now. Oh, you can't hear it at all? That's awesome. All right, good. The NQ is at the low of the day. Below yesterday's lows now. Oh, that is an ugly reversal right there. Let's look at a volume chart. 500 volume. So this is 500 contracts traded. So that's not good for BTC, right? You're seeing that reflected right now. I'll be streaming again Friday, and there will be no distractions. So apologies if you could tell that I can't catch my train of thought. Let's change the color up real quick, because I know you guys don't like the light stuff. You guys have any questions? Let me switch the chart up. I'll go through the comments. One sec. All right. You could hear the humming. All right. It's not that bad. No, you cannot KYC in the US. No. But I'm speaking to people that can KYC. How do you read the DOM? Best way to gauge derivative overzealous behaviors. I think you have to look at the spot futures premium. So looking at, for example, we'll just go back now, even though I just switched the screen. Go to prices, and these are spot prices up here, and these are futures prices down here. Let me change the color again. So notice how the spot prices are all trading above the futures prices, right? So we have Coinbase trading above OKX Perp, above Bybit Perp, above Binance Perp, Binance trading above everybody as well. So it's not a market where derivatives have overheated yet, and there's been really no periods of funding getting, blown out either. So, that's something that you would expect when the market is trending really hard, and we're in a strong bullish trend. You're going to see that baseline begin to shift. So you have to take that in consideration, because normal funding prints are going to be higher overall, but there's really none of that yet. You haven't even had periods where the futures market is traded above the spot market. Very brief periods, but if anything, what's been more common is that into pullbacks, we've had just funding go negative almost immediately. So, and you could, on Crypto Watch, you could look at funding. You could look at the current funding rate, and you could look at the predicted funding rate. And this is Binance, but you could look at all exchanges. So for example, let me just I'll give you an example looking at Bybit, which is notorious for being apes. The lawnmower is literally right against my wall right now. So we'll go to BTC. There we go. Sorry about that. Okay, that is Bybit. And then we'll go to predicted Bybit. I think Bybit's a good example because, again, they are normally getting offside. Okay. And those are your negative prints there, but we'll zoom out. It's not showing the complete history up there, but here's the predicted's fine. So there have been periods where it's gone negative very briefly, but you could see all the times where these periods where it's basically flat. So, looking at that zero right there, the periods where it's basically flat are periods where perps were aggressively selling. Now they might be aggressively selling because longs are getting liquidated. They can be aggressively selling because shorts are opening. They could be aggressively selling because longs are closing, right? So there's a bunch of reasons why the funding would be affected. It's just the delta between the perp price and the spot price. But it's been more often than not in this trend up that people have been betting against it, and you've seen that. With funding going negative, predictive funding going negative, and open interest increasing as people are increasing short exposure. So that is one way. You would want to see that. If the market was going to be frothy, you'd have to. If you're going to say the market is frothy, you have to also make a case for that in positioning as well. And it's not really there. So. The TPO time. So. Where is that? So I don't know why that's a mess up. It's just gonna label the one sec, you'll see. Where's my settings? Yeah, no, it's not starting at the Asian time. It was just labeled. So for example, if I just... That's weird. How did that happen? I normally don't use the web-based TPO. I'll have it open on the desktop, so I haven't run into that issue. What is going on? I forgot how to change that. we'll change the offset first. There we go. I mean, if you look at predictive funding on an individual exchange, you're just going to get a more specific idea of what flow is affecting the market, right? Or you're going to be able to break down where positioning is originating from. Like in the event of, if you have it aggregated and you know, one exchange is doing something out of the norms compared to the rest, it's going to be harder to see it. So a lot of the times, so I have a template with aggregated settings, and then I also have a template that has them separated on, one sec, on Coinalyze. So for example, you see these are all separated right now. So we could look at USD Perp on Binance and then compare that to Perp on Bybit. So looking at CVD, you can see there's two completely different stories. So Binance CVD not making a lower low, and then Bybit CVD making a lower low. I can't wait for CryptoWatch to integrate their DOMs, because I actually, I really started enjoying those trading streams, and I kind of hate streaming and just charting. It just feels so pointless. Like, if we're going to be honest, charting is not a big part of trading at all. It just really isn't. Every time that I just do a stream of charting, I get so fucking bored, and I feel like just a YouTuber who doesn't know what the fuck they're talking about, and they're just charting, and there's really no proof that it, you know, it's actionable, and it's just, I don't know. Because you could spend an hour streaming talking about charts, when in reality, the time I spend looking at a chart is so minimal. I mean, at the beginning of the day, I'll look at the chart, I'll mark off the levels. Sometimes I'll write the levels on a notepad. Sometimes I'll write them on a Post-it and put them on my screen. And then I'm not looking at the charts like this. And once you identify where you want to trade and where things change and where things might pick up, you don't have to constantly go through charts. I mean, I'll have one screen dedicated to, you know, just a layout of multiple charts just to see how everything is moving with respect to one another. But I mean, the idea of like going through multiple charts always and going, you know, from the, you know, with every trade doing something like this and going to the weekly and then to the daily and marking your lines off nice and slowly, and it's kind of garbage. It's such a infinitesimally small part of trading. No, Fern, I mean, obviously that's exactly what I'm saying. You find out where you need to do business, and you don't need to spend too much time finding that out. That's the point. You don't spend as much time finding that out as you do on a live stream talking about the chart. And alerts, yeah, alerts are very helpful. I use alerts, so I use alert service. CryptoWatch has alerts actually, and you get sent to your phone. So, and as I've said before, when it comes to my alerts, I'll set alerts, or I won't set alerts at the level. So a lot of the times, most of the time I'm sitting in front of the computer, right? So I could see if we're trading to a level, but a lot of times I'll set alerts in advance of the level. If I have an alert at the level, and like, let's say that I'm away from the computer and I'm, who knows, for what reason out during the day, I'm making a sandwich or something. If I get the alert at the level, it's kind of useless, right? Especially if I'm trading intraday and I'm trading lower time frames, it's not as useful to get the alert, right? As we're at the level, I want to know when we're approaching the level. Unless, for bigger swing trades, most of my swing trades, I am going to be taking off of, the hourly and up. So I need to see development anyway. So it's not like I'm going to be jumping in a swing trade that, the first time we come through a level. So I think just to be clear, anyone who is using CryptoWatch, I think this week some more exchanges are going to be integrated. I'm waiting for all exchanges to be integrated, and then we'll go right back to that. And ultimately, those streams, if some people might be on this one that weren't here for the other ones. One sec. But those streams were just like this. Just thumbs up. We'll have a small chart. And what we'll do is we will spend more time not talking about the chart and just talking about things we're seeing than going over the boring high time frame level, low time frame level, and so forth. And ETH is on the move. Well, that's good. Yeah. I pulled that up while I was talking, didn't I? And I didn't even mention it, but I intended on it until I started reading comments. Yeah, ETH is ETH hasn't moved significantly in the last couple of weeks. We're still at that 0.0625 low. So it's possible we base out here. Again, we have Shanghai as well coming up in the next 12 hours now, right? Let's take a look at ETH BTC. So I said yesterday, like, people are spending all their time trying to predict. Let's see if did he get me set up yet? Oh, nice. We're set up to trade some BTC. So this is interesting. These are micros. So I'm waiting on, so actually they should be integrated now too. So micro BTC, regular BTC and ETH. But I was talking to my guy yesterday. So my broker, at EdgeClear, and he was like, oh, you got to check out the new micros products. And so that's why I have this one up. I'll probably go around to trading the regular BTC contracts, but let's see. This is, so I don't know honestly, I don't even know what the point value is. So that's one contract. It's probably worth, let's see, one sec. Let's set this to, give me 1 second. Hold on, I want to set that P&L to data, session display. Oh, this is going to be good now. All right, 1 sec. Points to currency value. Okay. Let's take a look at the currency value of one contract. Let me move this over. Just adjust this so I could fit the NQ. All right. All right. So that was 25 to 2. Okay. So I see. So it's one contract, and we're down $2 when it moves 25 points. So I think it's 1/10 of a Bitcoin. Yeah. That's awesome. All right, let's close that out. Oh, this is great. This is really exciting. Now we can just, oh, this is going to be a lot of fun. Oh, that's it. All right. Friday stream. We're going to be trading ETH and BTC through the DOM. We'll have the NQ up, and then we'll just chart like this. So we'll have the Crypto Watch chart up. ETH is on the move. Yeah. Did I already address that? Yeah, I did. I thought that was a new comment. ETH still hasn't broken out of its high time frame consolidation, so. Yeah, it's really easy to get caught up in a chart. That's the thing, too. Less is more, honestly. So I even, for example, I cleaned up I have a chart book for the NQ and the ES, and I have like all these different tabs on it. I have a TPO for composites. I have a TPO for regular TPOs. So one TPO chart is just naked, and I just use it to create the composites, and that drawing goes to all the other charts. Then I have an hourly chart, a daily chart with VWAPs, and two different charts that have CVDs and different tick settings. And I just started trimming stuff, and I'm thinking, there's things that I have on my charts sometimes still that I haven't used in forever, and they're just even taking up space for me looking at them. So you want to try to be as clean as possible, and looking at a lot of charts can be kind of disorienting. So I mean, you look at your charts, you establish the levels you want to trade, and you try to remember these levels, you write them down, you get them in your head, and then you just observe price maybe on, depending on what you're trading intraday or high time frames, you look at one chart around that level. And for me, it's like I'm looking at a low time frame chart if I'm intraday trading, and I'm just looking at the DOM and looking at the tape. New daily lows. So now this is going to be delayed, but just pull up the NQ on this. So it hasn't made lows yet. I don't know how delayed this is. Might be a couple minutes. Yeah, I see. I just pulled up Sierra. So yeah. Broker is Edge Clear. Yep. I use Edge Clear. Giancarlo at Edge Clear is great. I don't work for them. I'm not getting anything for sharing this. But Edge Clear is also Futures Trader 71. He is I think he's the president or CEO, the guy who's behind it. And he's an order flow legend. So he puts out a ton of educational content too, but that's his brokerage. And I use them. Costs are great. And then I use Phillips Capital for my FCM, so my futures clearing merchant. And then I use Rhythmic. And then I use Sierra Chart to trade. So there's a lot, but that's just trading legacy markets. That's just trading futures. It's all those things you need to deal with. Unless you're going to trade through, unless you're going to trade through a TD, Thinkorswim, a TD Ameritrade, right? Then you don't have to worry about all that. You just have to worry about satisfying your margin requirements, making sure your account's set up to have those connections, and then that's it. But you're never gonna get this kind of speed. You're never gonna get the execution quality. So, all right, so let's, that setup, one of the things I was just talking about was risk being put on within this tight range between 33, so 30,300, and where we are right now, the lows of this move after CPI is 29.96. So it's possible that we have a short opportunity below. Oh, I'm sorry about that. I am on a different chart. Here we go. Change this again because that Binance connection is shit. There we go. So if we end up taking out these lows right here, so again, just to show you where that setup was. So a break of 30,300 back up to yesterday's highs. So that would be here. All right. Or a break. Set this to 30-minute to see the gap. A break of these lows, so 30,000 probably takes you to 29,500, right? That was the where the single prints began. Yeah. So this little box is where a good amount of risk has come in. Not a significant amount, but not a, nothing that's major, but I think if we end up breaking this, given that the ES and the NQ are making new lows, the NQ is still holding 13, but I wanted to see the ES hold 41.35. Our CVD divergence is clear on tick charts compared to 1 minute or 5 minute. Absolutely. I mean, if you can, get away from using time-based charts for your lower time frame charts. So for example, this is the NQ. All right. This is the NQ 500 contract candle. So what that means is each candle is printed off 500 contracts traded. And I have, so on my lowest time frame setting, I use the Heikin-Ashi because I think it's really good to see. It's just cleaner, right? It's a little bit cleaner, and that coupled with the non-time-based candles, it reduces the redundancy of having time-based candles, cleans up the chart, and makes the rotations a little bit cleaner for me as well. Just to clear this though, so you guys can see what it looks like without that. Where is the Heikin-Ashi? Hide. Oh, shit. I don't want to do that because then the candles aren't going to show. Either way, so this is the 500 contract candle. This is a 1,000 trade candle. So a tick chart. And yes, using this versus a time-based chart, it's going to make the rotations cleaner. And we use time, right? So the idea of being accepted in an area, a lot of times we'll not only look at whether or not it's remaining bid or there's absorption there, but we'll use time as well. Like if the market is able to spend a good amount of time in a region, we'll say that it's developing value there and it's being accepted there. But other than that, like for lower time frame charts, I think you want to get away from time. You want to use some kind of range setting, whether it's a range candle, a volume candle, or a delta candle, or a tick-based candle. Because again, there's times when the market just moves sideways and prints candles, but there's nothing taking place, right? After hours, in crypto especially, there's periods where candles print just because time passed, but there was like nothing traded. You don't really want that being part of the structure you're looking at, right? You might attribute some kind of significance to that, when really there is none because there was nothing that took place there. So the idea of not using a time-based chart cleans up your chart. And if you're looking at a really clean chart with CVD, yeah, you're going to get, I think you're just going to get a sharper look at the market. And yes, it does show divergences a lot cleaner because you've, cleaned up a major component of what you use to determine that, which is highs and lows and corresponding highs and lows in CVD. Now, what I would say is if let's say you're trading and this is what most people do. Let's say you're a 1 minute chart trader or a 3 minute chart trader. You get used to that kind of scale of the market, right? or that view, what you should do is you should find what, to get comfortable first, you should find what tick setting, what volume setting, or what range setting replicates that the most. All right. Now, the tick setting and the volume setting, sometimes they won't replicate it at all because maybe nothing happened, right? Maybe nothing was traded, or maybe a lot was traded, and then it's going to look very different. But what I've done is I've tried to get, like, for example, instead of looking at the 1 minute chart, I look at the 1,000 trade chart. So if we look at this is 1 minute, right? And this is the entirety of today. And then we look at 1,000 trade. And this is the entirety of today, right? So it cleans it up a little bit, right? And then if we look at, for example, 250 contract candle, it's closer to that 1 minute. So this is, again, going back to, this is the beginning of today's session back here. And now looking at that compared to, so that's the entirety of today's action. Looking at that compared to a 1 minute chart. Where's the beginning of today? That's the beginning of today. That's weird. Wait a second. What happened right there? I feel like I just missed something completely. Oh, no. Okay. Never mind. It looks obviously much different because there was no trading in the beginning before market opened. So before market open, for example, before market opens, overnight hours, there's no trading, right? There's barely any trading. If we put on I'll put on volume real quick. You'll see. It's not going to make sense when you have this standardized, but when you put it on the minute chart again, time passed, candles were printed, but nothing occurred, right? No volume. So yeah, absolutely, I would try to transition to the non-time based candle for the lower time frame. And then I even have I have settings for what are higher time frame candles. So I have a 2.5K trade setting. So it's just a little bit more, right? Now you see there's a couple days that I could look at. But again, I've reduced that. I've cleaned the chart up by taking out that time component. Let's see, go back to the other chart. Breakdown is occurring. Let's see if we're going to get a continued breakdown. Let's play around with these BTC contracts. What's going on? Why is it back to not working? Hold on one second. Do I have to scale into this? It's only, so they have to fix something on their end because it's only letting me get into a certain amount of contracts and it's not a margin thing. That's weird. All right, so we'll leave that. And point is that I'm going to take this trade and see if we are going to continue to stay. Right now we're trading below 30. So we get a further markdown, and it's trading higher on the CME. Remember, it's trading at a premium. But what was I saying before that? Sorry about that. Trend reversal chart is a great chart. I've used trend reversal is the other set. So I've moved over to just using tick and and using volume, but trend reversal is one that I used heavily in the beginning, and it's not like I moved away from it because I don't find it useful. It's just I prefer using the tick chart or the volume chart. Yeah, I mean, this something is off with this because it's trading in profit right now, and it's still showing negative for that currency value. Switch that, see if it fixes with points. That's weird. Yeah, I gotta call my guy. But we'll see if we could take this down to 29.5, which would ultimately be right around 29.8 on CME. There we go. Oh, okay. So it caught up finally. You see that? It goes from so I mean, you were going back and forth on email. Like, I got it set up for you right now. It's taking a minute. It just jumped. You saw it went from negative 10 points to 275 points in profit. All right. That's funny. So we'll have to keep an eye on that. I don't know what's up with that. But we'll hang on to that. We'll see if we can get that spike lower. I'm going to share this with him so he sees what I'm talking about. Oh, there we go. Nice. All right, so that's we're approaching an area where let me just peel this off. See if we get filled by bid. Come on, get me out of here. There we go. One contract left. Just peel out, actually. All right. Okay. See, these are the streams I enjoy. I gotta tell you guys, I've been doing this for a long time. I don't care to be a YouTuber just going over charts. I don't know if anyone has been following me a really long time. They can kind of hear like the tiredness in my voice going over the same shit that everyone talks about on Twitter anyway. And it's like, it's just fucking useless. And you know what? Like, I'm streaming and I want to be trading, and it's at this, I'm just waiting for Crypto Watch to integrate their DOM. But until that, we have this working now, which is great. And you listen, Crypto Watch, phenomenal platform for more than that. I just want to use that during the stream. Any questions, guys? You can hear it in my voice. Yes, you can. You can, can't you? Because, like, I swear, and maybe it's since I've had a baby also, where I'm just like, I don't want to do this. Like, and that's why I transitioned. Like, a month ago, I started just trading during the stream, kind of narrating what I'm doing. You know, can't be bothered to go over a million charts and chart requests. Let me look at the alt. It's not going to fucking go anywhere anyway. And then we transitioned, and I've just been waiting for the DOM to be connected on Crypto Watch, and I've been charting instead, and man, it's painful. Quick explanation to explain to a 5-year-old brain. Listen, to a 5-year-old, I'm going to say don't bother, but for someone who's new, I would definitely say that, one, you have your work cut out for you. It's going to take a lot of time before you get anywhere, so be willing to put in the work until then, and that means take advantage of all the free stuff. So one, YouTube is honestly a great resource. There's plenty of people out there that actually put out great content. I've curated a list of people and things that I think are valuable to traders from all walks, whether they're beginners or they're veterans. So you could join my Discord. I will share that Discord link on Twitter again after this. It's free, so there's no catch. but I'm just going to send you to the Discord because there's a resource page with a bunch of things that are really useful. But for a beginner, I would honestly take an academic approach to trading. So what that means is like you're going to hear a lot of things about screen time and watching the chart, and that's the best way to learn, and that's absolutely true. Like watching the market, all right, observing screen time, that's very important, but you still got to understand like what you're looking at some level. So I think there's probably like 3 or 4 books that I recommend to beginners. And one of them is a basic book on technical analysis. And I'm not a technical analysis trader. You know, I'm a person who trades around technicals. But when you start, there's some people that, you know, they really put a lot of weight into technical analysis like it's predictive. It's descriptive. But there's one book that I recommend for technical analysis because you want to learn about market structure and some of the basics with respect to that. There's some price action books that I recommend. And then there's some books that are for thought process. There's a book that has nothing to do with trading, but it's probably one of the best books for trading, and that is Thinking Fast and Slow. But, so I'm eating crackers. CH, I will share my Discord link on Twitter after this stream, and then you can DM me there, and I'll set you up. Oh, dude, streaming's annoying. So my daily routine is pretty much the same, always, and down to my breakfast for the last few years. But I wake up around 5:30. So I have a daughter now. So I wake up early, not to look at the market, but so that I could get some good quality time with her. And then the stuff that I didn't write down the night before, I'm just checking the charts again to see what happened in the overnight session while I was sleeping. Basically mark off my levels, not just levels in market structure, but is there any kind of new risk that came into the market that I want to account for? So new positioning that might be sensitive depending on where we're trading with respect to it. Anything occurring in the news, check that box off. So today, for example, is pretty obvious. We're going into CPI. We have FOMC, and then we also have the Shanghai unlock. So it's pretty narrative heavy. And then that's that. I write down my thoughts for the day, where I want to get involved. Make sure that I stay accountable to myself by doing that. So writing things down is actually really important. So you are kind of creating a contract with yourself at that point. Because when you write something down and then you go against it, you really understand how much of a dickhead you are. If you were able to actually write that down and then break your own rules, it just makes it realer to you. And then I'm trading from 8:30 in the morning till mid-afternoon, depending on what kind of day it is. Most of my legacy trading takes place in the first 2 hours of the day. Crypto can be all over the place, but my routine. So now with a baby, it's awesome. I want to say that I have no idea what anyone's talking about when they say it gets in the way because you know I've been someone who's been trading from home now for 7+ years. And before that, trading much longer in total. So being a stay-at-home dad is, listen, if you can't manage time being stay-at-home dad, I don't know, you got something wrong with you. So my day looks like I'm in my office trading for an hour. My wife knows after I feed my daughter first bottle of the day, we hang out, we talk a little bit, no phones, nothing. And then I'm trading. And then I'll step out of my office when things slow down a little bit. I'll do a little floor time with my daughter, spend a half hour with her, come in and out. And it's honestly, it's really easy because we have in my office, what I did was I set up a floor thing for her. So one of those like mats that has the colors and the patterns and the tactile things and the mirrors. And I'll bring her in here and have a little bit of time with her and then get back to trading and then more time with her. And it's honestly, it has not been something that has caused me any trouble at all. It's been really easy to get used to. I imagine that changes with multiple children, obviously. But my wife's also a stay-at-home mom. So, you know, between the both of us, it's, you know, we're spending a ton of time with our daughter and we're not, it's not infringing on what we're doing in our own life, which is our life now anyway. I mean, fuck, after you have kids, like what's better than that? What time do I sleep? I try to get to bed at around 10 o'clock. After having a daughter, after having a child, I try to get to bed earlier. You know, it's anywhere from 10 to 11. I'm definitely in bed by 11. Both my book recommendations, I'll post a Discord link. I have a massive, so for example, hold on one sec. I'll pull it up on the screen. You'll see. Discord's taking a second to load. Oh, I have some direct messages I have not seen. Hold on. I mean, I put together quite an extensive book list. So I'll share this link on Twitter after. And then we have all the Crypto Watch templates, resources, all the things that I use. So I keep this updated. Books, classroom, some stuff that has been useful that I've seen and pointed out. And I'm not in here a lot. So when I see something, I go through periods where I'm in here a lot and when I'm not. I just tried to make it a knowledge dump. The best part of it is probably this channel for beginners. All of this stuff. Throw a dart at it and start somewhere. All the things that I think are really useful, all the sources that I think are really useful. A mix of videos, of PDFs. You got a bunch of books up here that are in PDF format. My templates for exocharts. This is a free course that I put together. So you can take this completely free. This is a course on order flow and market profile. So there's probably 200 videos, I think, or 100 plus videos. I can't remember, honestly. That might be complete nonsense. I think it's over 100 hours. Some price action basics. Some market profile basics. So it's completely free Discord. There's no catch, you know. Yeah, I think, listen, Tobias, how you do anything is how you do everything. Or how you do everything is how you do anything. So discipline in trading, discipline in health, discipline in diet, discipline in working out, all those things are connected. My gym sessions are, this is turning out to be a pretty good live stream now. My gym sessions are anywhere between 11 a.m. and 1 p.m. I used to be a guy who was interested in fasted morning workouts. For a long period of time, I was a late night guy, so lifting a little bit heavier late in the day when I was into putting on size. But I mean, I'm like 220 now. I don't really go for size anymore. But most of my training in the last year has been between 11 a.m. and 1 p.m. And around now, I'll start doing cold plunges again. I didn't do them over the winter really because fuck. But I'll do cold plunges first thing in the morning. I'll go to the gym either between most of my time, like I said, between 11 a.m. and 1 p.m. And it depends on how the market is, whether or not I'm going at 12 or going at 11 or going closer to 1. But it's just felt like, you know, consistently for the last year, it's been around lunchtime. My gym sessions have shortened up. So I used to be a 2-a-day guy. For like a decade, I was 2 a day at the gym. 2 sessions a day for like a decade. And now my sessions are probably like 30 to 45 minutes, honestly, man. Not long. But I do not fuck around when I go in the gym. The best thing that you could do, honestly, is buy an iPod or have a phone with you that you don't use anymore that has your music, and get in the gym and work out and don't look at your phone. Just have something for music. But you could get a great workout in 30 minutes as long as you're not, you know, dilly-dallying and fucking twiddling your thumbs between workouts like a lot of people do because of the phone. Yeah, Trader IMP. I imagine it'll be a lot more difficult when she's crawling, especially, you know. I could put her down behind me. Like my wife will be in the office with me. I have a couch and a rocking chair. But if my wife steps out and she's on the little mat, I have this mirror. I could set my camera up. I mean, if you think about it, but I have a mirror that's like a trucker mirror that you'd see on a like a semi, and I could see her behind me. But if she's crawling, it'll be difficult, right? But I can't wait for that anyway. Do I track my body fat percentage? No, not anymore. No, I haven't tracked my body fat percentage since I was a wrestler. My lowest body fat percentage, I got down to probably like 5-6%. Maybe even slightly less than that on cutting days, but that was when I was wrestling, and that was a completely unhealthy thing. But I don't know where I'd be right now, honestly. Healthy amount of body fat, I'd say probably between 10 and 15%. Like, listen, I'm not going to fool anybody. Like, I'm not in peak shape anymore. I posted a couple pictures back in the day when I used to just be an animal, and I put on a good amount of hide, bear hide. The cold plunge I have is I have a Rogue barrel, so I have that tub that they make. Very simple. I'm actually going to get a built-in, but we're gonna have our deck redone, and I want to make sure that that's done before I have anything that's constructed on the side of the house. But I have the Rogue barrel, which is perfect. The thing about it is I found that it's advertised to hold temperature longer than it actually does. So lucky for me, we have a place where we get ice nearby, and they have like bulk ice, like a beer place. But I got to fill it quite often in the summer. Water temperature from the hose is not cold enough, but it's great. It's simple. And the cold plunge is not. So I see some people cold plunging after they work out. I don't know if that's a good idea. I think you want the inflammation for muscle repair. So I think it's better to go in like a sauna after workout. I love sauna. So I never miss sauna therapy. Every single day, 20 minutes in the sauna. The cold plunge for me, first thing in the morning, it is about being comfortable in discomfort, and then also doing shit you don't want to do. So doing that in that aspect translates in other areas of your life. I think, you just kind of saddle up and do things that you don't necessarily want to do, and you have to do them anyway. So getting into that 45-degree water, it sucks, but you just got to do it, and you do it, and you realize that you're fine after. What weight was I wrestling at? God, when I started wrestling, I don't even remember the exact weights anymore, but most of my wrestling when I was younger, I was like 118. I was in like the 118, or it was like 121 weight class. And then I think, I was not 220 when I was young, but I think, between 118 and 155. So whatever the weight class is up there, it might be like 150 or 155, but yeah. I put on most of my size after college. But I was always, from the time I could, I was a 4-season athlete. So the earliest sport I got into was baseball and lacrosse. Played baseball most of my youth. And then I played lacrosse we had a program when I was in 5th grade on. And then I played lacrosse most of my entire life. And then I was lacrosse, football, and wrestling. Throughout school. And then got into golfing later in life. Yeah, Trader IMP. It's funny because like they just grow. Everything you hear is true. I'm looking at pictures. I take a picture every day, and it's amazing how fast she changes. She's going on 4 months old now, and you fall in love with the version that they currently are. Like, oh, I don't want her to grow up. She's so cute, and then you fall in love with the new version of them, and you don't really get a chance to miss the last one. But then when you look at pictures, you're like, I'm a total like I am over the moon with being a dad. So you can probably tell. But yeah, light middleweight. But all right, guys, I'm probably gonna wrap it up. It's 11:30. Let's just do this moving forward. Even if those DOMs are not up, we'll have the charts on the left and we'll just go back to the trading streams. Shout out to partners, Crypto Watch and Bybit. The links are below. Phenomenal exchange and phenomenal platform. And just waiting any day now for them to get all of their integrations for the DOMs. And if I didn't point them out during this stream, this is what I'm talking about. This is what I want to use. And listen, I could trade on other platforms. I could trade on the CME, right? But I want to trade. The point is I want to trade crypto through these because I can't trade alts on the CME. I want to trade crypto through these because you could, all the features that they have with this are, there's none of these are found anywhere else. I mean, Silico Terminal has more advanced order features, but it does not have the ladder. But with this, you'll be able to scale. I think they're integrating TWAP and just the idea that it'll be all in one, right? I could have, for example, this is I'm waiting to use this. This is one of the trading setups. And this is the other trading setup. And very easily, the point is I'll just be able to switch between pairs and pull up everything I need and have that ladder right there to get in and out of positions. So really look forward to them putting this through. And if they hear me, please get working on it. We want it sooner than later. All of the exchanges suck. Trading through an exchange sucks. So when you have something like this, I mean, it's a blessing. All right, guys, that's it. Everyone have a fantastic day. I will see you again on Friday. And on Friday, we're just going to be doing this. This is all we're going to be doing. We're going to have the chart up on the left. We'll have a mid-time frame chart, low time frame chart, and we'll look for just opportunities during the stream. And we'll do more of what we just did, which is just Q&A, because I think that's much better. Honestly, the last 10 minutes of the stream, I enjoyed. I fucking hated the beginning of it. Not just because of the lawnmower, but I'm not. I think you guys can tell. I'm not into pointing out levels on a chart. That doesn't do anything. All right. Until next time, be well. Stay safe. We got the minutes coming up in 2.5 hours. So, I don't know. A lot can happen. Adios.